Welcome, curious minds. Get ready, because today we're digging into some truly remarkable figures that could really change how you look at the digital asset market. We're doing a deep dive into Ethereum's recent, well, unprecedented inflows. And believe me, this is way more than just big numbers. It seems to signal a fundamental reshaping, of the digital asset landscape as we know it.
That's absolutely right. These huge capital movements, especially the ones heading into Ethereum, they've pushed the total digital asset investment products to a completely new all-time weekly high. So in this deep dive, our aim is to really unpack these frankly staggering figures. We'll explore what they mean for the market overall and pinpoint exactly where investor interest is, well, not just flowing, but actually surging right now in the digital asset space.
Yeah, our mission today is to give you, our listener, those key insights, those aha moments from this major market update. We want to help you quickly get up to speed, really understand these surprising and incredibly significant developments, cut through the noise, get the real story. Okay, let's unpack this then, starting with the headline figure because it is truly impressive. Total digital asset investment product inflows just hit an all-time weekly high, an incredible $4.39 billion.
Wow.
Yeah. And to really get a sense of just how big this is, remember this figure hasn't just beaten the old record. It smashed it. The prior record was $4.27 billion.
And that wasn't even that long ago, right? December 2024.
Exactly. Set back in December 2024, right after the U.S. presidential election. So it's a huge leap in a really short time. Seems like momentum is accelerating fast.
It is, yeah. It's powerful proof of the market's, underlying strength, and I think it's growing maturity. And just to give a bit more context here, we're seeing more than just these record weekly inflows. The total assets under management, the AUM, across all digital asset investment products, that's now hit a frankly eye-watering record of $220 billion.
$220 billion.
Yep. And this isn't just new money flooding in. It's also asset appreciation, sustained confidence. Plus, global weekly trading turnover in ETPs, that's exchange-traded products, also hit a new peak. $39.2 billion.
Okay.
So these aren't just like isolated spikes. When you look at all these numbers together, they paint a really clear picture. Widespread market expansion. And crucially, it strongly suggests growing institutional adoption, more professional investors getting involved. ETPs make it easier for them, right? A familiar route.
Right, that makes sense. Now, here's where it gets really interesting, maybe the most surprising part. While the overall numbers are obviously massive, one specific asset just completely dominated, really led the charge. Ethereum. We're talking about an astonishing $2.12 billion in inflows just into Ethereum last week alone.
Just think about that.
It's huge. This single week's number was nearly double its previous record for weekly inflows. It's just an unprecedented amount of capital pouring into one digital asset. Feels like a major shift in focus.
And it's not just a one-week blip, is it? Ethereum's been on a really strong run for a while now, showing that sustained investor confidence. I mean, if you look at the inflows from just the last 13 weeks, they make up 23% of its total assets under management. A full 23%.
Wow, that's significant.
It really is. And to put it even more clearly, this year alone, Ethereum has already pulled in an incredible $6.2 billion. That's already more than its entire full-year inflows back in 2024.
Already topping 2024's total.
Already topped it. So, yeah, this isn't just some fleeting excitement. It really signals a deep structural shift in how investors are thinking and a real belief in Ethereum's long-term value.
So what do you think is driving this huge surge specifically into Ethereum? I mean, beyond just general market buzz, are there specific catalysts you see?
Oh, absolutely. There are several key things likely feeding into this. First, there's massive anticipation around the potential approval of a spot Ethereum ETF in the U.S.
Right, after the Bitcoin ETF.
Exactly. Following the success of the Bitcoin ETFs, traditional investors clearly want regulated, easy ways to get Ethereum exposure. The potential regulatory clarity is huge. Second, Ethereum's recent Denkin upgrade. That's been a game changer. It seriously cut transaction fees, boosted scalability for layer 2s built on top of it, makes the whole system just more efficient, more attractive.
Lower fees always help.
Always. Third, you just can't ignore the ongoing innovation and growth in Ethereum's DeFi and NFT ecosystems. They're massive and still expanding. And finally, there's this ultrasound money narrative around Ethereum, with its deflationary aspect where more ETH gets burned than created, plus attractive staking yields. It makes it look increasingly good as both a store of value and a productive asset. Put all that together, it's a powerful story for growth.
That really does make perfect sense. Okay, so while Ethereum was, skyrocketing, let's talk Bitcoin. Its inflows were still very substantial, $2.2 billion this past week. But crucially, that was actually down from the week before, which saw $2.7 billion.
A slight dip then.
Yeah. Bitcoin ETP trading volume still dominated, though 55% of its total exchange activity. So it's still the big beast, the market cornerstone.
Right.
But that relative slowdown in new money, especially compared to Ethereum speeding up, well, it suggests a really interesting reevaluation might be happening.
Exactly. And that slight moderation for Bitcoin leads us straight into another key trend, the altcoin rally. It's clearly picking up some serious steam. While Bitcoin holds its place, capital is definitely diversifying. Solana led the altcoin pack this week, impressive inflows of $39 million.
Solana's been strong.
Very. Right behind it was XRP, pulling in $36 million. And then Sui with $9.3 million. We also saw smaller but still notable inflows. Chainlink got about $30.9 million, Cardano, $0.3 million. What's fascinating is just the sheer breadth of interest now. It's spreading beyond the top two, moving into a wider range of assets with different uses, different potentials.
Suggests a more mature market, maybe? Investors getting more discerning?
I think so, yeah. Definitely suggests a maturing market where people are looking beyond the obvious plays. Yeah.
And, there's this weird anomaly in the data, too, kind of challenges the usual thinking. Multi-asset products. They were the only category to actually see outflows last week, specifically $16.4 million. What does that tell you? It seems like people are getting way more specific with their bets, right? Not just going for the broad crypto basket anymore.
That's a really sharp observation.
Yeah.
And yeah, it's critical. This strongly suggests investors are moving past just wanting general crypto exposure. Instead of casting a wide net, they seem confident enough now to make these highly targeted bets on specific ecosystems or specific tokens.
Why, though? Any thoughts?
Well, it could be a few things. Maybe they're anticipating clearer regulations for individual assets soon, or perhaps responding to specific tech upgrades on certain chains, or maybe it's just higher conviction. They believe more strongly in Project X over Project Y rather than just betting on the whole sector. It really implies a shift from just getting into crypto towards more strategic, high-conviction investments. That's definitely a sign of an evolving market.
Okay, before we get into the geography of all this, where the money's coming from and going, just a quick word for you, our listener. If you want to stay right on the cutting edge of these market moves, and maybe you haven't yet, now could be a really fantastic time to think about getting set up on some top digital asset exchanges. Actually, you can register today and grab a great 10% discount on both spot and futures commissions over on the BingX exchange.
That's a decent saving.
Yeah, it's a good way to get started or just make your trading a bit more efficient. Plus, to stay totally on top of the latest insights, make sure you subscribe to our Telegram channel. We share real-time updates and analysis there. All the links for BingX and Telegram are right there in the description below this deep dive. Definitely check those out. Okay, so, geography. Let's explore where these incredible flows are actually coming from. Which regions are really pushing this market expansion? And, maybe even more interesting, where are investors pulling back? Because the global picture tells us a lot, doesn't it? About sentiment, local economics, regulation.
It really does. And, well, no huge surprise here. The United States was overwhelmingly the main engine. A massive $4.37 billion flowed in there during the week. That really cements its position as the major hub for digital asset investment right now.
Driven by the ETFs mostly, you think?
Largely, yes.
Right.
Those spot ETF approvals have made crypto exposure much easier, much more acceptable for traditional institutions and wealth managers in the U.S. But other places saw good inflows, too. Switzerland brought in $47.3 million. They've had a crypto-friendly stance for a while now, very progressive regulations. Australia chipped in $17.3 million. Hong Kong, which is really emerging as a regional hub, added $14.1 million. And Canada saw modest but steady inflows, too, about $3 million.
Okay, so mostly positive, but as you hinted, not everywhere saw inflows, right? Some regions saw pullbacks.
That's right. Brazil, for instance, actually recorded $28.1 million in outflows. Now, that could be down to various things, local economic shifts, maybe specific regulatory worries hitting confidence there. Sweden saw $21 million leave. Perhaps different risk appetites or maybe local tax policies on digital assets are having an impact. And Germany, usually a strong European market, had $15.5 million exiting.
So what's the takeaway from these differences?
Well, it tells us that while the overall trend for digital assets is definitely positive, definitely expansionary, this growth isn't happening evenly everywhere. It highlights this complex mix of market sentiment, local economic factors, and crucially, how important regulatory clarity is for attracting and keeping capital.
Right, so if we tie these regional bits back to the bigger picture, what does it all mean?
Well, the data clearly shows this growing investor appetite for assets beyond just Bitcoin. And there are definite geographical preferences shaping up. QCP Capital, they're a well-known crypto trading and research firm, usually have pretty sharp insights. They noted really significant shift. Bitcoin dominance, Bitcoin's market cap share of the total crypto market, it actually slipped. Went from 64% down to 60% just over the past week.
60%, okay.
And at the same time, Ethereum's market share jumped up noticeably from 9.7% to 11.6%.
Okay, that's quite a swing in 1 week.
It is. And it raises a really important question for all of us. What happens if this trend keeps going?
Yeah, that's a critical point. A drop in Bitcoin dominance. For people who follow the market closely, that often signals a broader market rotation, doesn't it?
Precisely. And KCP Capital explicitly said they expected if this pattern holds, the next phase of altcoin season might already be underway.
Altcoin season.
Yeah. Historically, you often see altcoin seasons kick off after a strong Bitcoin rally. Profits from Bitcoin kind of rotate into smaller cap, maybe higher risk, higher reward assets. So this trend suggests capital isn't just sticking with the top two anymore. It's actively looking for opportunities across a much broader spectrum. It indicates investors are feeling more confident, more adventurous maybe. It points to real diversification happening among some big market players looking for that next wave of growth.
Okay, so let's try and wrap this up. The main takeaway for you, our listener, seems pretty clear. These recent record inflows, especially Ethereum's absolute massive surge, they signal a really significant, really dynamic shift happening in digital asset investment. It points strongly towards growing diversification, moving beyond just Bitcoin, and this surging enthusiasm for a much wider range of digital assets.
Definitely.
We're seeing a market that's not just getting bigger, but also more complex, more sophisticated.
And this leaves us with an important thought for you to consider, maybe mull over on your own. How might these shifts we're seeing, in asset dominance, like Ethereum gaining ground and these different regional investment patterns, how might they influence the long-term structure, the long-term growth of the digital asset market?
Yeah.
What new opportunities or maybe new challenges could pop up for different projects, for different investors because of this evolving landscape? It's a market that's always adapting, isn't it? Staying informed isn't just helpful, it feels pretty essential right now.
Absolutely. We really encourage you to keep doing your own deep dive into these fascinating market dynamics. Thank you so much for joining us on this exploration today. If you enjoyed this deep dive, if you found these insights useful, please do hit that like button, subscribe to our channel,
Yeah, definitely subscribe.
and ring that notification bell. That way you won't miss any of our future deep dives. Thanks again for listening.